Good evening, traders. This financial markets update is for October the 16th, 2010. It's about 9:22 p.m. Eastern Time on Saturday. I'm sorry I couldn't get this video out earlier. I've been having terrible internet problems and they can't seem to get it fixed. I guess they're upgrading to a fiber optic system in my area, and over the past few weeks it's just been getting worse and worse, and right now I'm having trouble even getting online. It's really affecting my work. Alright, so the first thing I want to start talking about is I want to give you an outline of what this video is going to be about. I want to go over some of the earnings that were reported last week and also the earnings that are going to take place next week, and just to give you some insight of what could really happen and what I think that the markets could potentially do on Monday. I'm going to start out looking at the NASDAQ, which is the chart that I have pulled up right here. And it seems like that the NASDAQ is priced to perfection. I mean, Google reported, as you can see, on Thursday, and they blew away the numbers. That caused people that were thinking Apple was a little soft around the 300 level, so they were catching shorts. And it seems like that Friday trade was just people and Apple just covering. Because what you saw some huge rally up in the morning, then they pulled back, and then they started going up, and the buying just started increasing and increasing. And that's probably because people were short around the strike prices, and then they started covering, and Apple closed around 216. Google closed around 603. Great runs, guys. Google 60 points on their earnings beat that took place on Thursday. I'm going to pull all these charts on. So basically what I think could happen this next week, some events that happen: the euro took a little decline, and then the US dollar caught a slight bounce. Gold went down about 6 points in the bullion market. Bonds, they finished down in some of the late note treasuries. So right now what I think could happen, here's just the scenario right here. If Apple comes out, it seems that Apple already has their earnings based into the price, and the good earnings based into a price. So if Apple misses, 300 is going to be a major support level, because we've already talked about these psychological levels like Google 600, Apple 300, Dow 11,000. That could test some support, but they really have to blow away earnings, and if they do, I think Apple could trade up to 330, 340 pretty quickly. That will then send the NASDAQ up to the pre-flash crash high at 2535. Now, a lot of people are just saying this market is overextended, and I couldn't agree with you more. But the people that are taking the risk of actually getting long and buying every dip in this market and even buying tops are being rewarded very well. And I can't complain. I mean, I've taken some risks that I usually wouldn't take, but when the levels change, I change. Right now, everything seems great in the market. Now that could change tomorrow. Some more buying could come in the dollar. Gold could shed down a little more. So right now, if I think the Russell, the Dow, and the SPX will stay pretty strong, but I think that the comp could get a little soft next week, especially if Apple misses, and I'll show you the other companies that are reporting to give you a little more insight. The first thing that I'm going to point out is CSX reported on Tuesday. If you guys don't know, CSX is a railroad company. Some of CSX's sisters are Union Pacific, Norfolk Southern, Burlington Northern, and Canadian National Rails. So like I said, they beat earnings, and it looks pretty good. Now the reason I'm going to show you these individual stocks is so you guys will have a clue of what to expect for when the other earnings report this quarter. So right now we know that CSX beat on earnings. We're going to keep that in the back of our head, so the next time we see one of its sisters report, we'll know what to look for, even if we're day traders. I don't trade stocks on earnings. That's just me. I never have. I've seen too many people get burned. But if you're really experienced with options, I wouldn't judge you, because I've known people to make a lot of money trading earnings. I day trade earnings stocks. That's what I do. All right. So the next one I'm going to look at is Intel. Intel beat on earnings by 2 cents. They revised higher for the fourth quarter, and they see emerging markets being a boost in the company over this next quarter coming up. So we went up, and then we sold off a little bit, but we remained firmly above this 1930 support level that I have. Intel is a technology company that mainly makes chips. Some of its sister companies include Advanced Micro Devices, Texas Instruments, IBM, and Broadcom. Now I'm looking at symbol HST, Host Hotels and Resorts. This company is not just a hotel, but they also are a REIT. They own some investment properties, and they work in the real estate market as well. Now, a little insight on this company: they have about 110 luxury upscale hotels and about 61,000 rooms. Okay, so that's a pretty big company. Some of its sister companies include Marriott, LVS, and Wynn. They didn't beat on earnings. They came in about even, exactly what the street expected, 11 cents. But the CEO came out and said that 2011 should be a peak towards occupancy levels that they haven't seen in the past 3 years, which is a nice comment that he made. Then on Wednesday we had JP Morgan beat. Now they topped their estimate forecast, but the revenue was weak. Therefore, the shares went sliding over the past 3 days. JP Morgan is a commercial bank. Some of JP Morgan's related stocks would include Bank of America, which is reported next week, Citibank, which is reporting next week, I believe on Monday, PNC Financial, and Wells Fargo. With JP Morgan's miss, that sent the Russell 1000 Financial Index down on Wednesday. Now, if the other banks have the same kind of news as JP Morgan, this could lead into a sell-off and the financials leading us down lower. Then we have Apollo Group, which is an educational stock. They reported after the close on Wednesday. They had a devastating quarter. They beat earnings expectations, but when they came out and they said, they warned of slow growth, that really caused the stock to be devalued, and it looks like that the institutions were dumping their positions in this. Now this, when they reported, it took a toll on all of its sister stocks, including Seco, Coco, DV, which is DeVry, and Strayer. That's just a few. There's of course a lot more. I'm just naming the most important ones in this sector. So the schools, we need to watch them going forward. If we have any schools report next week, we'll know what to look for. Look, Apollo reported bad. They already have some of Apollo's move priced into them. I saw more institutional selling after Apollo reported. So we'll just take this into consideration. Then on Thursday we had AMD report, and we looked at Intel. AMD is a sister company of Intel. AMD, they reported better earnings. The profit was a beat, and they traded to a high of 765 before they trade sideways and held under the 719 resistance level that we had. 698 will be a level that will be pretty important as the week presumes. In my opinion, this is not a day trading stock, but some people can make money off of it if you buy a large amount of shares and you know the direction of the trend. But 20-cent moves in a day as the range is not my style. Then we have Google. Google blows away earnings. Has a close on Thursday at 5:40. Then after they reported, they run it up to 6:03, and that was the close on Friday. Yahoo reports on Tuesday of next week, and Yahoo is a sister company of Google. Also Microsoft is, and AOL. And it looks like the calls were more active on Friday than the puts on Yahoo, so that could be telling you something. That is not a recommendation, it's an observation. Now I'm looking at J.B. Hunt. They're a transportation service, big semis and stuff. Some of its sister companies include Knight Transportation, Werner Enterprises, Heartland Express, and Conway. So they beat earnings. It looks like they missed by 1 penny on the top line, but it looks like investors took this sentiment as a positive. As you can see, when we opened up, I want to show you how accurate these levels are. We opened up at 35.33. We ran up straight to 36.26. Actually 36.35 was the high. That right there is a point move if you're in it. The first trade, if you have 1,000 shares, that's 1,000. I don't need to tell you the numbers. I'm just pointing out. Then they came down. They presumed a little lower, and then they took place again. The 35.33 level was bought up, and then we went right back up to 36.35. That was another dollar move. Earnings plays are very important, guys. If you learn them the correct way and you really practice, even if it's with a paper account, they can make your whole month in a few days. Next we have Charles Schwab, symbol SCHW, and they're a security broker and dealer, just like TD Ameritrade and E-Trade Financial, also Scottrade, although I don't know if Scottrade is a stock. Now they beat on the top line, but the revenues were a little worse than people expected. That's on the trading side. But it looks like it was a good day of trading. Put in a lot of swings after this 14.35 level. We ran right up to 14.55. That's a 20-cent move, but it's only a $14 stock. If you had 1,000 shares, $200. I can't complain about that. Just trading off levels. Anyways, GCI reported on Friday. Some of GCI's sister companies are the New York Times, News Corporation, and Media General. They missed on earnings and they sold off, but they've had a great run, this stock. Now I'm going to go back to a weekly time frame, and we're looking here. When we bottomed in March of 09, we hit a low of 185. I actually owned this stock at 237, and like an idiot I took $1 profit. There's so many stocks that we look back on now and just kick ourselves in the butt and say, why didn't I hold that? Why didn't I hold Bank of America when it traded all the way down to 253? You could have bought it at 3, and then it rode up to $20 a share. I don't know if we will ever have these opportunities again, so it's hard to reminisce and look back on stocks that we could have, would have, should have, but didn't. I just wanted to point that out. So like I said, when the other publishing companies report, we know what to expect, and we'll use GCI as a reference. Now then we had GE report Friday after the close, and it looks like they beat on the top line, but the shares stayed pretty much flat in the after hours. So Monday, if the stock goes up, I presume that GE, the investor sentiment, is a positive. If it goes down, then of course it's a negative, and it could potentially retrograde down and then presume back up. That's just another observation that I assume could happen. So next week is going to be a great week. I'm going to be updating you with well thought out videos of strategies that we could implement during the trading week, and if I have enough time, I'll get a video out to you tomorrow looking at the earnings that are coming in this week. You guys have a great weekend, at least what's left of it, and I'll talk to you either tomorrow or Monday.